I'm Matt Bichard for REIT.com, and I'm in San Diego for REIT World 2012. Joining me is Mary Frankel, Vice President and Senior Credit Officer with Moody's Investor Service. Mary, welcome.
Thank you. Good morning.
Let's start by talking about the credit markets. How would you summarize where things are today?
The credit markets are doing well. There's great liquidity for our public REITs and public companies, and the issuance, in fact, even according to the statistics on your website, have been unprecedented. So far, there's been approximately $60 billion of issuance this year. $32 billion of that has been equity, $17 billion in unsecured notes, about $10 billion in preferred stock. So definitely the credit markets have been open for the public companies, and they've had access to all four quadrants: debt, equity, public, and private. And it's almost a tale of two cities, however, because the smaller, the small to medium-sized private real estate firms haven't always had the same success as our public companies and access to the amount of capital that they need. But basically, operating fundamentals are good. Firms are either they're getting better or they've stabilized. And in fact, at Moody's, we have a stable outlook on the REIT sector right now.
And one of the themes that we've seen continue to play out in 2012 has been the public companies continuing to deleverage. Is that something you expect to see continuing in 2013?
Absolutely, yes. As long as they need the capital, they're going to access the market. They're going to deleverage, because one thing they found in the recession was that liquidity is a good thing, and having that extra capital. And so we do think they will continue to go to the market, pay down their lines of credit, get money for acquisitions, and some of them say they just want to keep some powder dry to see if any interesting opportunities come up. But they've also been able to, what's been interesting is they've been able to issue over the last year at unprecedented low rates, and which has definitely helped boost their NOI as well as their fixed charge coverages, which is something we like.
And obviously there are quite a few factors in REIT's favor right now, but what are some possible areas for concern as you look ahead?
I would say the areas of concern I would put into two buckets. One is the macroeconomic environment that everybody talks about, this fiscal cliff that's looming, and the European uncertainties. And we think until these issues are resolved, it's going to be a little harder for REITs or any public companies to really push NOI growth. The second bucket, I would address the particular sector issues. May it be global trade for industrial, or consumer sentiment for retail, or business and leisure travel for lodging. And so every sector does have its issues, but the bottom line of all of this is until you have jobs and more employment, it's going to be harder to push a lot the need for space and NOI growth and spending and the ability to pay for all of this.
Mary, thank you so much for your insights.
Well, thank you for having me.
For more on this and other REIT news and analysis, be sure to visit REIT.com.